Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, March 4th, 2013. All right, let's take a look and see what the S&Ps are doing as of Sunday evening, the 3rd of March, and this is for the update for the 4th of March on Monday. It is right now midnight between the 2 days, and we'll look on the left-hand chart. And it looks like in the past 2 or 3 days it went up dramatically. That was the 199-point move in the Dow, and then it popped up and looked like it was going to make it. Made it up to 1524, 1525, and then with a dramatic turnaround at the end of the day, next day it slammed down about, I think it was down like 1200 on the S&Ps, and then excuse me, and then popped up with a positive close like 2 or 300. So that was on Friday. So you would expect kind of a follow through to happen on Monday, except for one thing that I've been pointing out to you for a very, very long time, is that this is a declining wave pattern. T1, T2, and now 3T, which wasn't declining before but is now. And these three are the trading patterns for the daily chart. So what we have now, because of this declining pattern, is that as of midnight, the S&Ps are down 700 points, or seven handles. So the 8-period moving average right here is this little blue line right here is starting to drift a little bit down. If this continues down, then we could actually see the S&Ps on Monday do a if it even closes anywhere below what it closed at on Friday, it's going to be it may be a very dramatic move down. The bonds are moving up. Gold is in a slide. Apple is in a slide. They are both all three of those are precursors to a market that's going down. It doesn't matter what they say on CNBC about new highs and everybody saying, no, now we're only 75 points away. Now we're only 60 points away. Now we're only 110 points away. It doesn't matter. This is what I see happening. Right there. Bing, bing. And it could be very quickly, or it could be a slow bleed. Eventually, when every time it moves down, there are buyers that come in the market. On the one day that's not going to happen, we may see a 50 handle move on the S&P. All right, so what am I looking for confirmation? I already have confirmation that the waves on T1 and T2 are moving down. What about confirmation on shorter time frames? Okay, the 144-minute chart that's only that trades as a cash price on the E-mini futures are, let's take a look at this. T1 is down, T2 is down, T3 is down. Major trading waves for the 144. So when did this go down? It started slipping down right around the 1st of February, and it confirmed it. It confirmed it right in here, and then on the short T1, long T1 confirmed it here, and it confirmed it here. So these dates are all sequential. The lead indicator, which will give you a long heads up, and in this case, it gave you let me see, from February 8th all the way up to February 19th. So it gave you 11 days and not much of a move from 1514 up to 1525. When it's all said and done, that's not much of a move when you compare the move from November, which was 1343. So, and then sequentially it moved down on 215, and then 221, and now it's going down on the shortwave on T3 on 225. So let's look at the 21 and see what that looks like. The 21 has already, remember I pointed out in the last video that it was very odd that we had low, usually, well, it was very odd that we had higher lows and higher highs, while the cash, the future price was lower highs and lower lows. That I don't think I've ever seen before. That's very, very strange. Usually it's just like as I've mentioned before, it's quite the opposite. That the waves go up, the prices go up to higher highs, but the waves are lower lows as a contraindicator. And then you know it's going down. This is a little bit different and quite intriguing to me. Okay, I like looking at the 1597 tick chart, and let's get some days in here. This was, let me see here. Okay, the two white marks in here, the two vertical lines are the 8:30 start of trading on the S&Ps, the cash trading session. Although the tick chart runs overnight, but I did want to show you that at approximately 1 o'clock on Thursday, when T2 went below 0, right in here, and we're talking about 1518 took a ride all the way down to 15 before this wave moved up. You were all the way down to 1502 right here. Whoops, well, like right in this area. Okay, and then the longer wave moved up here, and it gave you an entry on Friday, and it took it all the way on this wave all the way into here. So let's see, that was 1503 all the way to, and you would have had some hiccups in between there during the day, so you can play the shorter term ones. You can use the shorter term waves to get out if you want, or you just ride the long wave. And this got you out at 1516 near about 1 o'clock Central Time. All right, what I've been looking at lately, which has really kind of intrigued me, is which very rare, but when there's a lot of activity, then it's better to look at the longer waves that have overnight trading. So right here, I'm looking at a continuous contract on the ES, the 4181, the 4181 right here, 4181 tick chart. So it's a 24-hour chart. And let's see what happened here. During the day, let me see, right in, let's get a line right here. We're looking at this line that's crossing on T3, and it gave you a heads up by about 45 minutes. These waves are an early warning system. So the first time it goes down, it's right about in here on T2, and then T3. Well, and then once T4 hits, it's a confirmed down. Now T4 hit a little bit late right here, so you had this entire time to pick a position for this move down, which was 16 points. Okay, the end of the day, or near the beginning of Friday, it moves up here right about 1504, and makes it up to 1516. So that's just a way of playing the day trades. I like to use these as a guide and trade on the 1597. So that you can see the entries on the 1597 are much more clear. They are. Let me put a pen to that. This was a Thursday move right here, and you basically nailed the entire move. Whoops. Into. Let me see. I think I can do a little bit better than that. Let me see if I can get a straighter line. Okay, right in there, and then you covered when it went up, just like I showed you before, and then you covered when this went down. Okay, let's look at one more thing. I want to take a look at Apple really quickly, because I like to use the 1597 on Apple also. And Apple over here. Okay, Apple is down 10 points on Friday. So where's it going to go? We may have to use the 987 because this is loading. Okay, let's use the 987. Let's get rid of that one and move this over to where it started on Friday, which was right about here. I'm gonna pause this and populate this for a second. Okay, I decided to use the 610 on this one because I wanted to show you something. Something that happened back on the 26th of February when this is the daily chart on the left-hand side, when it looked like it was going down and down and down and down. And if we look at this candle right here, after it been going down a series, and then it went down to I believe that was 437. Yeah, went down to 437, and then did a reversal on the day up to 452. So that's a 15-point move. If you have options, that's a nice move. That's a 50-75% move. But how do you know it's going to move up when it's just like dangling down there? Except for the fact that you might get a hint off of the January 28th low, but that's not necessarily going to stick. But if you look at the 610 tick chart on T2, which is this baby right here, when this looked like it was going down, 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 down from one day to the next, all of a sudden T2 started to go above zero right here, and then T3 went above, and then T4 went above, and you had this time frame to get in, and it shot up from 437 all the way up to right in here. So let me just look at the time frame to give you an idea. It was 11:04 when it fired the signal, and it moved about in a 2-point range from 11:04 to 11:52. You actually had 45 minutes to get into this trade before it took off from, let's call it 439 up to 451 when T1 fell below zero. An enormous trade, and it was a reaction trade, so there was a lot of short covering in there. So let's take it back to where it is right now, and what we have is T1. T1 is below zero. T2 is halfway. T3 is descending. The majority of T4 is below zero, and all of T5 is below zero. The stock's going down. It doesn't look like there's any question about this whatsoever. The question really is, where is it going, and what the target is. So if I'm going to just kind of like move this graph out over here so we can take a look. All right, now what we have here is, let me see here, let me move this up here. Okay, this progression, this series that you're looking at, the white line purple, green, and orange are um, moving averages that I picked that have to do with Fibonacci progressions. And the idea that the 8-period exponential moving average has maintained itself below the 21, and now that they went below the purple line, which is a 377, and now it's below the 610, there is absolutely nothing to stop this from going to 391. All right, let's take a look at the weekly and see if we can see one of those exponential moving averages come up. And we get, let's see here, let's do a reset on this. Okay, it was 391 on the daily. Then that brings us back to the 233 exponential moving average on the weekly. So if it breaks the 391, it's going to 370, which actually is the 370. If you come all the way back here, is this line of tops and line of support that goes all the way back to 2011, and look and see where that comes out, right at 370. So I like that as a target. I like 391 first, and if that doesn't hold, 370. So get yourself some puts out of the money. You can get yourself some out of the money puts if you go like 2 months out. Don't do the Marches, do the Aprils, and you'll make some really nice change on this one. All right, that's all I have for tonight. It should be a very exciting week with the yen moving up, bonds moving up, gold probably moving down, and Apple moving down. I don't see how this market is going to stay up. There's too much confusion going on with the ECB about how much money they have to dole out to probably save Italy. The trade wars, or the currency wars that are turning into trade wars, are still going on in full force. And who knows what's going to happen. I don't like this market to the upside. Well, good luck trading, and for those of you who have heard my blurb before, you can sign off, but I'm going to continue for about another 1 minute. Okay, I have a Triton Wave consulting service for those of you who are new to this. I do trade for major clients. I trade gold and silver, but I also do individual traders. If you want to get in touch with me, please email me at tritonwaveguy@gmail.com. I also do individual stock selections for private clients, and I can give you a workup of video, send it to you, or text it to you of sell signals and targets. So just let me know. Good luck trading, and I will see you at the next update.